Hey everyone, Kim Snyder here with your Saturday, December 23rd edition of Sane Crypto. And today we're going to talk about a couple of things. One thing that is just making me crazy and is in fact the impetus for Sane Crypto in the first place, as well as a question about whether or not Bitcoin / cryptocurrency is a Ponzi scheme, some questions about brokerage firms getting hacked. So we're going to cover that in this quick edition of Sane Crypto, so stay tuned. Let's start out with something that is just completely making me crazy, and hopefully I have this set up so that you can so that you'll be able to hear this. I wonder if it's going to let me play this. Hopefully you're going to hear this. Let's see.
Nice. Well, this is great. So you know what? If you have some coin to invest, maybe you do that. Maybe you hodl. Maybe you panic and you sell everything at a loss, because that's what a lot of the newbies do. They like to buy at the high and sell at the low and freak out in between, and then complain about how they lost money and it was a pyramid scheme and it was a big scam. But what you do is you buy and you hold, and then you hold, and then you hold, and you forget about it until the year 2025, and you're like, oh my God, I can't believe this is worth this much. Woohoo!
Well, at least that's our opinion. That's what.
Okay, so I'm not sure if you heard that or not, but that was these guys. Okay, I hate to name names, but here's the thing. So what they said, if you couldn't heard them, was basically that the market has gone down 30%. They are exhorting people to hodl, which is short. If you are not familiar with the phrase, it means hold on for dear life. And he's saying hold and hold and hold until 2025. Okay, fine. But here's the part that kills me. I mean, first of all, these guys say they say all the time that they not only are they not financial advisors, they just got into this. I mean, I talk all the time about people mistaking a bull market for genius. These guys mistake 1 million downloads for genius, and they are cheerleading in a way that I feel like is very, very dangerous. What the statement that he just made, in case you didn't hear it, was he says if people had bought during the internet bubble and held, that they'd be pretty happy right now. And okay, and that is exactly to my point. Okay, so let's look at this in a sane way, shall we? So if you've ever seen my roadmap, this is at sanecrypto.com/roadmap, and you'll notice, I wish I had my I don't, hang on, I'm going to put my cursor thing on so that you can see my cursor a little bit better. There we go. So down here, okay, I believe it's patently obvious, particularly in light of an article I'm about to show you, but you know, it's just obvious to anybody that we're in a bubble, and I do not believe that bubbles are inherently good or bad. In fact, that's one of my first principles. Bubbles are an opportunity to make a lot of money if you know what you're doing. There's also a saying, I can't remember who it was, but he basically says, like, no disruptive technology has ever been created without a bubble, right? So I believe we're in one, and you must act accordingly, which is in a sane and measured fashion, with a clear understanding of both the risks and the rewards, because there are both. So as you can see here, a bubble period, which we are in cryptocurrency, is characterized by irrational exuberance. People with no experience, hint, hint, piling in, thinking that they are geniuses, and that the fast climb in prices, of course, which the predominant emotion over here is greed, clouds people's judgments. Now, in this period, you only trade risk capital, meaning money that is basically monopoly money. If you lost it tomorrow, it would not affect your standard of living in any way, shape, or form. Okay, and this period, we are clearly making a gamble. What we are betting on here, and I could talk for a long time about my rationale for why I am making this bet. But which, because normally I wouldn't. You see here in these periods, right? I'm not going to be invested when we get to Ashes and Caterpillar. However, here I am, and the reason is that as long as you are using risk capital, the potential returns are so massive that, for me anyway, that risk reward ratio is so skewed right now towards, we know it's going to crash. We know it's going to, but the opportunity, as someone who does know what they're doing, to make money off of those who don't in the short run, quite frankly, is just, who's gonna pass that up? Not me. Okay. Knowing full well that tomorrow it could go to zero. But that, there's also outsized return. So, and the key here in that period is discipline and, in protecting your profits with a rigid, trading plan, like my, sane crypto system. Okay. Now, so this is the period that we are in. Okay, so now let's go to what these guys said, because this just makes me crazy. So first of all, this is the NASDAQ. This is the peak, March 24th of 2000. Okay, and you can see that it took 17 years roughly just to get the index back. Now I have heard them say then and other times, if you held companies from because here's the problem that we have with investing in any bubble, right? There will be winners. All right. So everybody gets greedy. There will be thousands and thousands of these new coin offerings that come out, just like they did during the internet bubble. And 98% of them will not survive. 98% of them are total junk. I listen to some of these things and I think, like, really, people are giving you money for that? But whatever, right? The same was true during the internet bubble, right? And some will survive. And here's the problem. Not only do you not know which ones will survive, okay? So, pets.com, I'm sure you can't, that's the sock puppet, right? Yeah, then they won't even give me a chart on that. But, okay, so let's look at Cisco. Okay, and by the way, there are many, 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 many of these. Okay, so if you just look at the survivors, okay, and by the way, look, like Cisco was kind of like a cryptocurrency. In fact, very similar to a cryptocurrency back in the day, because they were building out the infrastructure of the internet. And what we're doing right now is we're in the infrastructure phase of blockchain, right? So if you look at it, if you had owned Cisco, if you bought Cisco near the top at 66.37 in February of 2000, you've never gotten your money back, in spite of the fact that Cisco is a very successful, stable company. But if you bought it here, okay, and you held it like that guy just said, until 2025, you're not going to be happy. Okay. How about, by the way, okay, here's Juniper. I owned, this was another one, right? Just, by the way, these just came up. I didn't put them there, but they're related stocks, ones which we all owned and traded during the internet bubble. Okay, here's Juniper, right? This was a hot stock back in the day, $170 in August of 2000. Okay, probably higher, somewhere in there. You never got your money back on that one. Let's look at VMware. Okay, now here's the thing. Okay, there are ones who did. Okay, this one is. They weren't during the, here's Microsoft. Now, Microsoft, by the way, is an interesting case, because this is another one that, like the NASDAQ itself, 5612 on January 14th of 2000, took almost 17 years, but you got your money back. Okay. And then finally, let's look at Amazon. Now Amazon was one of those companies that, was created out of the internet bubble. Right? Okay. And then that one's been, just been a straight upward climb. So if you bought that, you'd be looking like a genius. The problem is, out of the thousands that came out during that period of time, you have no idea which one is the Amazon. You don't. Okay? Which is not to say you don't invest in this. It's to say this idea that you just blindly hold forever because there's no way to lose money in this, which I hear people say all the time, and that this is magic internet money. It is not, y'all. There is no such freaking thing as magic internet money. So make sure that you understand both the opportunity for risk and the reward, and that you have a plan for managing them accordingly. Okay? Okay. All right. I'm going to move on to this. Now, I've had a couple of questions sent to me via Messenger, so I thought I would answer those as well. By the way, if you are watching and you have any comments or questions that you would like me to answer, I am more than happy to do that. I know I didn't announce that I was going to be doing this live, but if you are watching the replay, which thank you very much for doing that, feel free to just put your questions, comments down below, and I will be more than happy to circle back and answer them. Now, okay, so two questions that I thought I would answer. One, someone sent me this headline: Long Island iced tea soars after changing its name to Long Blockchain. I get it. And his question was, it was Ron, and his question was, sure seems like a .com crash is coming for crypto. How is this not a Ponzi? Okay, well, again, I agree. Okay, absolutely, positively. Some point there's going to be a crash. We're going to go from bubble to ashes. That's what bubbles do. The question is, we don't know when. Okay, it could be, if you look at and I'm not projecting, right? But if you look at the market cap of the internet bubble, right? That was trillions and trillions of dollars. We're at roughly 600 billion today. So, by that measure, there's a lot of room to go. If you measure by the number of people who know what this is and are adopted, because in 2000, let me just tell you, 80-year-old grandmothers were day trading internet stocks, So again, I am saying it could be tomorrow, could be 2 or 3 years from now. None of us know. None of us will know until 2020 hindsight allows us to look backwards and see that it has crashed. So that's why you have to have a system. But Ponzi scheme, no. Not at all. Let's just be clear. I think it's fairly obvious, not necessarily why I'm investing, but I think it is fairly obvious that blockchain, internet is to blockchain as Bitcoin is to Amazon. You've heard me say this before, meaning this underlying technology on which these coins are based on, right, is the same thing as Amazon and all these others being based on the internet. It was a newfangled thingy back then. Just like blockchain is a newfangled thingy now, that will be as disruptive in the future, I believe, as the internet is. It disintermediates, has the potential to disintermediate everything. And again, one of my first principles is this time is never different. Right? History repeats itself very closely over and over and over again. And I think this is history repeating itself. On that basis, are there tons of companies rushing their initial coin offerings to market in order to take advantage of the bubble that are just complete and total junk and crap? And are some of them maybe even dishonest? Of course. That's how it works. That's exactly what happened in the internet. That's what happens every day. Look, Wall Street used to bring these people to market, and now they're able to bring themselves to market. That's the disruptive nature of blockchain. But by the way, where'd it go? Companies did this. They just this is, again, history repeats itself, right? I remember this happening. I was an options trader during the internet bubble. And I remember companies doing this all the time. You would have like a surveying company, right? And then they tack .com on the end of their name, and suddenly their stock would shoot up, 5,000%. This is not new. This is history repeating itself. So Ponzi scheme, no. Bubble, absolutely. Due for a crash, absolutely. When? Nobody knows. Opportunity to make a lot of money if it persists. and I'm willing to bet risk capital that I can do that over whatever time period that is. Okay, and then finally, Carrie sent me this link after my webinar the other day, Cryptocurrency Exchange Collapses Files for Bankruptcy After Second Hack. Again, absolutely. So one of the things that is really interesting about blockchain and cryptocurrency as compared to stocks is what the technology does is, in theory, it takes the middleman, including regulators and governments, out of the middle of a lot of these transactions. And it is still the Wild West. I just said I was an options trader during the .com bubble, and it reminds me a lot of that period of time, not in the financial markets, but in like options and futures specifically. Things were the exchanges weren't connected. There was price, differences across all the different exchanges. You couldn't trade them in your IRA. It was just the wild, wild west. Now, this hacking thing is obviously an issue as well. So there's an additional piece here in cryptocurrency that we didn't have previously, which is that you have to and can take your coins off of whatever exchange you bought them on, put them in a hardware wallet so that they're safe from being hacked, and then when you're ready to sell them, you send them back up to whichever exchange you're going to sell on, and do that. That is for that very reason. Okay, this is there's lots of players who are diving into this space, both in terms of investors and infrastructure, and you shouldn't trust any of them really if you can help it. But one last thing to that point, for that reason, for what it's worth, it's one of the reasons why the exchanges that I use are US based, backed by lots of big institutional money, are trying to be proactive about complying with the regulations that they believe will ultimately be coming their way from the SEC and others. And not that they couldn't be hacked. Of course, that can happen to anyone. We know that from if we've learned anything over the last year, that's what we know. But at least so the bankruptcy and some of this other stuff, I feel like that's probably the best I can do, and that's what I would recommend. Definitely not leaving your coin on any exchange, at least any major amount, and just try to be smart about the exchanges that you're dealing with. Okay, so that is it for me today. I hope that you found this helpful. Here's our takeaways from today. Yes, Virginia, this is a bubble, but remember that markets are zero-sum games. The only way one person makes $1 in a market is by taking it from someone else. Some people find that offensive, but that is the game that you're playing. You're playing the greatest game in the world against the brightest minds in the world, and who are trying to take your money, because that's the only way that they win. I think I love a good bubble because it's all this, dumb money piling into the market. So with the price going up and just the opportunity to take that from people who don't know what they're doing. So, that's the game you're playing, whether you like it or not. Is it going to crash? Yes. When? We don't know. 2, y'all, there is no such thing as freaking internet magic money. Okay. Anyway, all right. I'm just going to stop on that. And be smart. Be smart. This is the wild, wild west. And look, if any of this makes you, if you don't feel, nobody is putting a gun to your head and saying you have to invest in this market. So, there's a ton of volatility in this thing. If that's going to keep you up at night, if you don't have risk capital, then by all means, I would not invest. But if you do, then, make sure you satisfy, make sure you have the sound plan and the discipline to carry it out. And there's the potential to do well. Okay? All right, so that's it from me. You guys, look both ways before you cross the street. Love you. Have a good day at school. Bye.